Air New Zealand has just screwed the shareholders over. Is it true? Well, stay tuned to find out here at Barry Chow, where you get all your financial news every week. First off, Air New Zealand. Did you take the rights offer if you're a shareholder? Or did you let it be and see your stocks dilute by 66%? Is pretty much what you lost if you didn't buy in. And what I mean by that is that you had the opportunity to buy whatever stocks you had in the company, shares in the company. So for instance, say you had 5,000, you had the opportunity to buy 10,000 more because you had 5,000 and they gave you on a pro rata basis, which means it's double that. So you had the opportunity to buy 10,000 shares from your initial 5,000 shares. Would have got you up to 15,000 shares if you brought in at the 53 cents per share. Now the problem with that is you didn't actually get any shares for free. So sometimes you get shares for free, which happens when a stock split happens. You don't necessarily get any value for your money, but you just have more stocks you own when that happens. So that's possibly good long term, and it didn't cost you a single cent. But with this, you had to buy in, and if you had a lot of shares and you wanted to buy every single one, you had to put in a whole lot of money just to get in. And that's where these people that were in the middle class, or definitely in the lower class area, that had shares in Air New Zealand but didn't have the money in hand, cash in hand, and really would like to have invested but just didn't have the money available, have found out they're being diluted. But luckily for them, there was one bonus they got from the bookbuild, the shortfall book, is they got 28 cents per share on the rights they had. So if you had 5,000 shares, you got 28 cents per share. So you did get some money for that. But where did you get screwed over, Air New Zealand investors, or even new investors on the stock book build? Well, obviously you all had to pay 81 cents per share in the stock build, and you could have bought as many as you like. And there was 270 million sold. That's how many shares was sold in that book build. If you got in and you're thinking to yourself, what? That's at 76 cents, the company? Wow. Or even lower, as on Friday, was 74 cents. You're thinking to yourself, oh, this is crazy. Well, you were crazy to buy at 81 cents because you could have bought it much cheaper. Now, a lot of people were getting a bit confused. Obviously, all the shares have gone right back into one. So say before this all happened, Air New Zealand shares were about $1.50, around that figure at that point, or were dropping a little bit lower before this was all announced, and it's crashed half in price since then now, where it is current. So it's a good way of looking at it, is that yes, you lost the opportunity of getting 66%, say more in shares, right? But you've also lost 50% gain in your stock price. You got some money, that was beneficial, you got some money for it, so it's not the end of the world. You got money for what shares you had, but long term it could really affect you long term if you like this company and think it's gonna, in terms of money you could have made if you didn't buy the offer. So yes, Air New Zealand. So yeah, so 81 cents, and you can now currently buy at 76 cents. Wow, you must be thinking to yourself, why did I buy at 81 cents? Well, simple. If I knew that offer, I would not have taken it. I did not partake in it, and to be honest, I only didn't partake into it because I didn't quite have enough money for what I would have thought would be a decent amount to want to buy more. So I just left to what I already had. And for full disclosure, I have over 5 figures in this stock alone. So I'm not just this one person that's got like $100 in the stock. It's one of the stocks, especially for New Zealand, that I'm committed to long term. But it's a long wait for people that are in the stock to make a lot of money. I think this is very much going to be a long term play, and I just took the discount when it was there. And I think the discount, a lot of people were probably thinking 53 cents compared to $1.50. I think that's what people were looking at. They really were thinking this is a great opportunity, but you weren't ever really getting that, because once those shares, all those new shares come into the pot, it all gets diluted down, and now we've got a price of 76 cents. So it's dropped 50%. So in terms of what you've actually gained by the 53 cent gain, yeah, you're looking at about a 25% you got on getting at 53 cents from where it is currently, roughly. So how do we feel about this as a Air New Zealand shareholder? Are you disappointed for the ones that didn't buy? Are you disappointed? Are you going, oh, my stock is pretty much half price? And for some people, a lot of people that would have bought in when it was at $3 before everything crashed a couple of years ago are probably thinking to themselves, oh my goodness, what have I done? Because now you're gone from $3 now down to 76 cents, okay? And probably in real terms, you probably dropped to about $2 roughly, or a bit less than that, on what if you had bought, if that is your cost price. So yeah, if you bought into the rights offer, your cost basis has dropped a lot more, thankfully. But if you didn't, your cost price is still up at that $3 mark, and wow, at 78 cents. It's not a good look, not a good picture at all. Very bad. Looking at what, 70% roughly drop from those prices. So was the book build smart? Well, they were smart for Air New Zealand because they got a premium on the price at 81 cents compared to if people were buying it now at 76 cents. So they've for Air New Zealand, the 1.2 billion was good for them. Very good for the company to get a little bit of debt off them. But the crazy thing is, I talked about in previous videos, is they've just taken out another new loan at a higher interest rate. So they paid off some debt, but they're taking a loan that was at a lower interest rate and paying a much higher interest rate. So in the long term, they're probably going to be spending more money, and more money goes to, New Zealand government. So New Zealand government is making more money probably out of this than Air New Zealand will. So that's just an interesting thing to look at. So long term, Air New Zealand, what are the benefits long term for Air New Zealand for the people that have brought in at 53 cents? Is it a bargain? Well, it's not really a full-on bargain. It's obviously a discounted bargain, but we'll see where Air New Zealand stock goes, because there's a possibility there'll be quite a few people that are taking this offer if they had a low cost basis and will sell out. And that's why you're seeing a drop already, because there's 81 cents. There would have been people that would have sold out in the last couple of days when the money has come in. There's the money came in, the shares come in today, so the money has rolled in for the people waiting for a bankroll. For those ones that didn't participate, you'll see that next week on the 16th. You'll see your 28 cents per share come into your accounts, depending on who you're under. If you're under sharesies or your own bank. But yes, looking at the future with Air New Zealand, will it go back up to where it was? Okay, so Air New Zealand has around 1.2 billion shares around, and the market cap was close to 900 million. It was a lot higher before, but it has dropped. So the capital raise has helped paying off debt, but a long way away here from Air New Zealand going profitable again, which is what they need. So once Air New Zealand can get profitable again, that will be a positive for Air New Zealand stock price. But obviously what's going to lag for a while, why it was up at a high $3 range in a few years ago, was a nice juicy dividend. Now that has been eradicated because of the government loan, and they're not expecting that till 2026, which is very costly for the people that bought in expecting the dividend. I was one of those. I keep buying in because I'm expecting the dividend to come back, and it just dragged, and now we're dragged another 4 years before it comes. But the good thing for the people that have invested, they believe 2026 they will return to dividends. So if the prices keep staying low, it's probably a decent buy. Now, will it get the $3 again? Well, they've just added a whole lot of shares, so it's going to take a lot to drive that price up. So yeah, a dividend would be definitely the main catalyst for a big jump up in price. I think over the next 4 years, you might be struggling for a big payday with this. This is definitely a super long term. I mean, like over 5 years, 10 years. I don't think in the short term you're going to make a lot of money. I think it's going to drop more. It might settle, but it might settle in the 70s somewhere. But I don't expect it to skyrocket to $1 very quickly. I could be proved wrong, but there's a lot of confusion out there on whether to invest or not in this company. I think for the people out there, there is probably better options out there in New Zealand and around the world. But if you're wanting a stock for the long term that I believe is pretty safe, like they're not going to disappear in New Zealand, and you'll make money in long term, and you want to invest in New Zealand, they are one of the solid companies in New Zealand. And this Rona thing is eventually going to stop, and we'll be back to flying everywhere as it's starting to already open up. So let's have a look at final conclusion for you, everyone here who have invested into Air New Zealand. Well done to you all. I know it can be risky when you're talking like big figures for the ones that have a lot of money in Air New Zealand. Yeah, if you're looking for a short-term gain, I don't think you're going to get short-term a big gain in this stock. I think it's going to be a bit of a sit and hold factor, unless somehow they get the profitability very quickly, which is a possibility once they open up. That will give you a little bit of a chance to go back over $1 again. But anywhere near $2, $3, the dividend's has to come back, and that's not 4 years down the track. So yeah, it's definitely a long-term play. It's not a short-term play with the Air New Zealand. For the ones that didn't buy in, well, being diluted doesn't help you. But again, not everyone can afford just to go boom, put like 10k in when they need it, because it was sort of out of nowhere. You only had a couple of months to really get your money if you hadn't had money on the sidelines ready. So that's something you may have learned from this announcement, and it's a good thing for any investor to have money on the sidelines ready to go. If you have it ready to go, you can take an opportunity like this and go for gold. Now, it was perfect go for gold with the rights offer, but the shortfall book build, it was not the right deal, and unfortunately some of you lost out. But anyway, that's enough from me here. So good luck investing, everyone out there. Remember to subscribe to Barry Charles and smash the like button, because we love you all, and I'll be back very soon with another video. Take care out there, in New Zealand shareholders.